All right. Good day, everyone, and welcome. My name is Onyo Bazi, and I'll be your moderator for today's session. First, I want to say a big thank you to every single person who registered and showed up. I know life happens, like network issues, power outages, busy schedules. So the fact that you're here means a lot. Thank you. So let's do a little exercise here. Can I know where you're streaming from? You can place that in the chat. So I can see Kingsley Ome live from Lagos. It's good to have you here. So I want to see a little more engagement in the chat. Okay, so I want to know if I can be heard. Can everyone hear me? Awesome. Okay, Benjamin from Delta. Nice to have you here. Good evening to you, Timothy. Live from Sango Ota, Ogun State. Good to have you here. Okay, so thank you guys so much for that. For those joining us for the first time, I'll just do a brief introduction of who we are. Analytic Sages is basically a data upscaling organization, and we're on a mission to democratize data skills and place talent with proof. That is our goal for this year. So awesome. Nelson from Lagos Island, good to have you here. So we train the next generation of data professionals through hands-on project-based learning like SQL for blockchain analysis, Python for data analytics, and machine learning. Our graduates have gone on to get recognized by top protocols, land paid gigs, do impactful projects across Web3 and beyond. Today's session is part of our commitment to bringing you practical, actionable insights and not just theory. So, now let's talk about why we are here. Prediction markets like Polymarket and Kalshi have exploded in popularity, but most people look at them and see gambling or speculation, basically. The truth is, these platforms reveal something powerful: crowd sentiment in real time. And for analysts, researchers, and traders who know how to read them, that data is pure gold. So if you were in our X space yesterday, today is more like, what is it called? A tip of the iceberg, right? And like icing on the cake. So from yesterday's session. Today's session is basically how to use prediction market data to forecast trends before everyone else. The goal is simple. By the end of this session, you will walk away with frameworks that will help you to understand what prediction markets are really telling you, identify the metrics that actually matter, and of course, apply these insights to your own research or trading. And to deliver this, we have someone who actually works with this data daily. Please welcome Mr. Tim. Can I see a round of applause in the chat to welcome our speaker? Awesome, awesome. I love the energy in the chat. So, who is Mr. Tim exactly? Mr. Tim is a research and data analyst currently exploring the prediction market arena. And before I'll hand over the mic to him, please remember to stay engaged, get your notepads and pens ready. Feel free to use the chat box to drop your engagements and questions as well, and they'll all be answered during the Q&A. So, Mr. Tim, you have the floor. I don't know if you can hear me, sir.
Oh yeah, yeah, I can. Good evening, Onyi.
Awesome.
Good evening, everybody. Um, I'm really excited to be invited as a guest to speak here, and allow me to do a bit of introduction about myself. But before then, let me try to share my screen, or probably my face. Right? I think that should do the work before turning it out. I guess. All right. So once again, good evening, everyone. My name is Etim Fon. That's my traditional name, but I prefer to be called Tim because it's a lot more easier to pronounce. I'm a data analyst and a research analyst, but I am more on the research side of things. I have contributed to several protocols. I've contributed to the fundraising of protocols. Given my experience in this space, I have contributed to other brands on the data side, on the research side, coupled with 4 years of experience in this space. And recently, I decided to get more interested into prediction markets. So I have made predictions. I have written articles and thoughts in leadership articles that covers this sector in Web3. Given my experience, I've been able to work with individuals from tier one brands, Binance, Bybit, Nansen, Alia Research, and a couple more I can't recall. But for today's session, I'll be discussing how we could make use of prediction markets data to properly know trends before it happens, and at the same time it will give me room to explain how prediction markets work, and if anyone is interested in playing around with the data, I would give a framework on how to make use of these data, how to analyze it, what to know um, before approaching the data, so you probably have like a direction on how to go about whatever you want to do with data, right? So yeah, that's like an introduction about me. Oh yeah, I guess I'm going to start. I can share my screen. Okay. Presents. Okay. Can we see my screen? I want to be sure everyone can see my screen. All right. So let me just get straight to the point. Okay, so the session is how to use prediction markets data to forecast trends and before everyone else. So I'd like to, I'd like everyone to look at prediction markets as a tool, and a tool that could be used for different things. You could use prediction markets to hedge information. You could also use it as a tool to predict information without having to actually bet, right? So I'll discuss how we could, how to do that. But for first, I'd like to explain what prediction market is for the for the newbies. So just think of prediction markets as these traditional betting sites like Bet Niger, Sporty Bets that people used to mainly bet for sports games. So prediction market is much more than that. So you don't only bet on sports games, you can bet on different events in different sectors globally, from politics to crypto prices to music events, weather forecast, and prediction market itself, poly markets and Kalshi, they introduced different kinds of formats on betting. So people now bet on mentioned markets. So let's say the president of the United States of America wants to make a speech, right? So there are some markets that you get to bet on the words that he's going to say. There are other markets that predict movement of Bitcoin in 15 minutes time frame. So in the next 15 minutes, you can go again to bet, okay, is Bitcoin going to go up? Is it going to go down? Right. So prediction market gives grounds for anyone to make use of the information you have or structures that you have. It reminds me of there is this protocol I found, or shall I say, an agent. They utilize AI agents. So they were good before prediction markets came to the spotlight. They were very much good at predicting prices. So they used lots of miners to predict prices, and they trained this data into a meta model, and they were able to predict prices. So when prediction markets, came to the spotlight, they were able to make lots of money out of that. So that's like one of the leverages that prediction market actually gives. So here in my slide, I said, okay, basically it's a prediction. A prediction market is a platform used to make bets on several events covering different aspects of things, from politics to sports to weather forecasts to wars, to even new primitives such as mentioned market and movement of Bitcoin prices. Think of it as a platform that you can use to bet, just like traditional betting platforms. So there are lots of prediction markets, as you know, but the two most popular is Kalshi and Poly market. But there are lots of other prediction markets. Like I mentioned here, we have opinion markets, we have fax machine, we have limitless, we have XO markets, we have there's a bunch of them, right? There's a bunch of them. There's one that's Coinbase recently acquired. I've forgotten the name. It's a company clearing, I guess. So there are like lots of prediction markets, and this prediction market, each of them, they have different dynamics, different structures, and at the same time, different data designs, right? So there is a way in polymarket data might be presented to you on chain. It would definitely be different from the way opinion markets might be presented to you, right? So we would go into that in details as we proceed in the slides. So as a data analyst, as a researcher, you know, when new primitives like this, prediction markets, I would like to say, is a primitive. It's an asset class. It introduces a different form of adoption in the space. Things like meme coins were, new asset classes, and prediction markets too is an asset class, and that's what makes it, mainstream. And for you to make use of the data, you need to understand how it works, how it varies from what is already existing. And yeah, I said, okay, prediction market, basically when this product wants to sell to the mass, want to sell for mass adoption, they will not go into these details, But as a data analyst, as a researcher, you need to understand how it works. So, but on the front end, anybody could just, okay, prediction market, you just place your bets with your USDC on Polygon or on Tron. You place your bets and you predict. That's all that matters, right? But when you come to look at it from the on-chain perspective, prediction markets do not just work that simply. There is an invocation flow on how it works, and I like to really match it up with decentralized exchanges. So probably you must have used Uniswap, you must have used PancakeSwap, and let's say you want to sell your Bitcoin and you want to swap it to USDT, right? You just connect your wallet and you impute the amount which you want, and you sign the transaction. Then what happens is that this token, this Bitcoin, is sent to a liquidity pool, and depending on the design of that centralized exchange, it calculate whatever. Some AMMs utilizes X times Y is equals to K formulation, right? So but prediction market is a lot more different. So let's say on these dexes you must have initiated that you want to sell your Bitcoin for USDT, right? What happens is that it just goes to the liquidity pool and they balance it up with whatever algorithm that they work with, and they send you the USDT. So at the end of the day, it's almost that simple. But on prediction market, what people see from the front end is that they bet their USDC, and they buy the shares. But prediction market is not that simple, right? So when you buy a share on prediction market, could be yes shares, could be no shares. Let's say you see a market and the market is, would Donald Trump speak tomorrow, and you can see a buy, you can see a no, right? So when you initiate the transaction, you say you want to buy yes. When you buy yes, what happens at the end of the day is that you are given an NFT that represents your position into that market. So your token, or your USDC, your dollar, does no longer remain with you, right? It's sent over to an exchange contract that reserves it and sends you back conditional tokens. These are NFTs, and these NFTs are used to represent the amount of USDC which you've initiated for the bet. So I can show some workflow here. On-chain analysis. This was um, one which I found. So let's say this is a transaction, and transaction hash here. This is a transaction on someone trying to make a bet, and this was a transaction done, and in exchange, this ERC 115 was given to the person to represent this purchase, or this transaction initiation, right? So these NFTs, more like, they represent your the amount of money which you've actually bet on the market, and depending, probably it gets to a point whereby your bet was accurate, it resolves to your bet, and you want to redeem your positions. What happens is that these NFTs are actually bonds, and your money plus your profits is sent back to you. So you do not just send it and receive the USDT, contrary to the way it works on decentralized exchanges, right? So but this time around, you must receive a conditional token, which is an NFT, and it represents how much you have um bets on the platform. And if I'm to go deeper into how it works, if I'm to check the traces of every transaction, you would find that trying to see one that, okay, I think this is going to be a lot better. I'm going to do this. I'm going to do this instead. Sec. I'm going to do this instead. Give me some time. All right. So, sorry, it's going to take some time because I've been on this sites a lot today. Give me some time. Um, trying to show. Okay, this is a user when he was trying to redeem his position. So if we have to check the traces and the call logs and the events that was carried out when this transaction was initiated. So this transaction basically is when a user was trying to redeem positions. And if you look at the flow over here, you find that this NFT was sent to this bond contract address, and both of them was the sent to this contract address, and this user received his $1 his $1 profit, right, from this contract. Meanwhile, the contract was now bond, and his USDC was sent back to him. But if we are to check when I'm trying to get a different this. All right, okay, this is what I'm looking for. So let me say after you must have initiated a transaction, right? What matters is that these contracts work in a way that they kind of confirm how much you've held. So that's NFT is like a representation, and this is like one of it that shows, okay, this balance is retained in this account. So this account is responsible for the minting of these conditional tokens, and they represent your USDC on chain. As you can see, it interacts with lots of other contracts, the bond address, the proxy address as well. The proxy address should be top loser. Proxy address, the proxy address of the user, right? So I think I've been able to make a point there. Next slide. Okay, so I went deeper to say, okay, every Polymarket wallet has a proxy wallet that initiates the transaction. So if you connect to Polymarket and you make a transaction, the wallet that you use to connect is not actually the wallet that would appear to have initiated the transaction. So Polymarket have what we call proxy wallet addresses that they use to sign transactions for you. So every wallet that is connected to Polymarket has a proxy wallet to it. And this is the one I got from this transaction. I think I've already gotten this. So while it loads up, in every transaction, hence there is a transfer of conditional tokens from the maker to taker. I've explained this. In this case, I'm the taker since I was trying to make a prediction on the 1 hour market. Hence, it's important to understand that in different scenarios, you would want to query for trades using polymarket table on Dune. All right, okay. Um, so having understood this, that when you sign a transaction, you do not just send your USDC in hopes for money to return. So the way smart contracts most times work in a checks and balance way. So they want to prove that, okay, that you've initiated this transaction. What would be the proof? Which was that conditional token, the NFT tokens, and in this case, I'm the taker. So for you to be able to make use of Polymarket data, I make use using Dune, and there are lots of tables. There are some tables that are quite decoded. Some other tables are really much curated, and the curated tables are a lot more lighter and easier to make use of if you do not have solid expertise on Dune or Polymarket data as a whole, because some of the data's some of the table columns have some distinction. In case you're trying to join the tables, you need to understand the tables differently, the column of the tables differently. So preferably, I would say anyone that wants to make use of Polymarket's data, I make use of Polymarket's data the most since it's more on chain. I haven't explored Kalshi. I think the two I've explored is Polymarket. I've explored Opinion, yeah, Opinion Markets. It's on BC Binance chain. Polymarket is on Polygon, right? So this is a query I did the other time, and so you could make use of the market trade table, depends on what you're looking for. Market details, market. Okay, this is Polymarket's positions and market price hourly. So this is I queried for the 10 rows from this table, selected all the columns, and this was what I got. So you would find different column names, but which is quite different from market details. Just in case you want to make use of both tables, you would need to understand what each column here stands for, and it will help you make more sense of the both tables. But one thing I think everyone needs to also know is between maker and taker. So poly markets actually incentivizes people to maintain spreads on different markets, right? And these people you would want to call the market makers, and they are the ones that they maintain the order books of poly markets. So most of the time when you initiate a transaction and you want to buy a share, it's always matching to what a maker has already opened, and I can show that in one of these call logs. So this is one of it. This is an event call that shows that okay, the order has been filled, the order has been matched, and you would find that the maker is these that start with A0F, and the taker is trying to get the taker. Um, taker is locked different. Trying to get the taker. And this is the taker. This with the ED4. This is the taker, and so these two people actually have to interact. So there are sometimes that you would want to query data. You would have to confirm that it has this event call, and in that case most of the time you would not have to make use of this curated data. You have to make use of the decoded poly markets data, and this is it. There are different types. Depends on what you're looking for, right? Depends on what you're looking for. A bunch of them. Trying to get them. That's the first thing I think everyone ought to understand when it comes to poly markets data. Um, but there are a few matrices people observe. People used to compare different prediction markets. People used to know which prediction market is gaining users the most, which prediction market are people making use of the most. And if you look at lots of other prediction markets, it's these matrices that people make use of the most. They compare prediction market based on volume, based on notional volume, based on open interest, and despite the comparison on these different matrices, liquidity matters the most. But I'm going to explain how that matters the most. And one thing I think everyone needs to understand was that at a time, poly markets volume was quite exaggerated. And I think they made changes to that after a few researchers called them out on that on X. I can't get the tweet exactly. It happened about 3 to 4 months ago. But the volume, the notional volume, I guess, the notional volume was exaggerated, and I can show you that. So this was a transaction I made on Poly Markets. Let me not even use mine. Let me use another one I found on chain. Um, so this is one, and this user, I don't know if he was buying shares or if he was selling shares, but I guess okay, yeah, I guess he was buying shares since he received um conditional tokens. And you would find that this transaction was just done for $1, right? But the notional volume records $500. So at a point, the data which was gotten on poly markets was more than what should have been. And I do not know, I think Dune updated this, but if you were working directly with explorers trying to work with APIs, probably your data at that time must have been exaggerated because if you check, notional volume basically measures the volume in dollar multiplied times the number of shares which you're buying. So despite these zeros being null, if this user was to buy at this user bought at $1, it should have at least been about lesser zeros and no five should be lesser number than this. But this, if you cancel out six of these zeros, I guess that's the way it's calculated. You would find that it's just $500 that this records for. So anyone on chain would there are a couple of other more transactions that were recorded like this, and that means the data was quite exaggerated. But I think they updated this because this was a bet I made on poly markets. I think 2 months ago. The volume was actually correct. The notional volume was correct. Yeah, this is it. This is it. You would find that this was at $0.1, and if you cancel out these six zeros, you would find that it's actually still 0.1 notional volume. So there are some things which you might want to do with poly markets data, and you would have to make some calculations to correct the old notional volume just in case um this this data, since the data was not changed earlier on, you would have to probably adjust your figures to get a true number. So currently the notional volume that you might calculate will be accurate, but at the time it was a lot more exaggerated than what we see now. That's one point I think everyone needs to understand. So that's why notional volume is not a dependable metrics. People no longer look into notional volume as a metrics that okay, so what's depending on to know if a prediction market is having adoption or if it's not. But volume can quite be dependable because and Dune also verifies this. If you check your Dune dashboard and the market straight table, you find a column like this that shows the price, the amount, and the shares. So the price times the shares would give you the amount, and this is the volume. All of this column is the volume. The amount is the volume. The amount column records the volume. But if you're to find notional volume, which will require a lot more queries, your data might actually be exaggerated. But for now, probably it would be best to check the time when that correction was made and curate your data to fit in and give true data. There are a lot of prediction market experts that I have spoken with, and they were trying to make some changes to their dashboards. Okay, so I said at the time the notional volume on poly markets was miscalculated, especially if when checking on chain, and I referenced the transaction. But I think this has been corrected as from okay. All right. So people as well, they use open interest and they use liquidity. So open interest basically is the number of contracts that are open on any prediction markets, right? The more contracts being open, the more you can tell that people are actually, making bets. And I think that's a much more dependable metrics. Although I haven't experimented with poly markets data that far to calculate or to know how this is calculated from using data tables. But there are a lot of tables that shows the open interest across poly markets. I think one which I would like to check is that of this guy viewing data or Probably I'm searching the wrong place. Game data. Forgotten his name. Well, let me just search for the market. For the market and check content. Okay, there is this guy. Yeah, data dashboards is his name. So I prefer his table more. Um, okay, as I said, he's even one of the people that I guess we were still working on their dashboard. They had to make some changes. Um, as you can see, it's showing this. This is still notional volume calculation. So as I was saying, I said okay, open interest, open interest, open interest, open interest. I don't know, did I pass it by mistake? Okay, let me just check all prediction markets as a whole. All right. Okay, so sorry, it's heavy duty. My device is not complying. This is volume. So yeah, this is open interest across different prediction. As I said, predicts dot fun opinion, polymarkets, Cauchy, and this is the calculation. Just in case you want to play around with the query or to do something else, you could just come here and check deeper on the query. So so yeah, so open interest is a lot more dependable metrics because to an extent it's hard to game. It's hard to game compared to volume, despite the fact that people could still open lots of contracts in the name of trying to farm poly markets or poly markets token. But that aside, it's a lot more dependable to use to know how adopted a prediction market is. And I think it works for every other platform, PepDex and the likes. Open interest is a lot more dependable metrics. So, mm, next slide. So, what else matters in prediction markets? As I said earlier, prediction markets is not only a tool for prediction, it's also a tool for hedging. And this is the most interesting part on how you could use prediction markets to stay ahead of the trend. So what I had to do earlier was to explain, how to understand the data, how the data actually flows, what happens when you initiate a transaction on poly markets. I use poly markets the more or most, so that is why I am, using poly markets instead of prediction markets. So this is the aspect of things I think you would want to hear about on how to make or to have an advantage over everyone in the market. And so I said that prediction markets is used not only as a tool for predicting. Let's say you have an information, insider information, and you want to make money on it. That's not only what you could use prediction markets for. You could use it for other things, and using the data. Now, I'll give an example. Um, there are so many times that someone might want to trade. Let's say a newbie trader wants to trade Bitcoin, and um, he's thinking, okay, Bitcoin should probably go up, right? And he makes his trade. This is off poly market. But he's not so sure due to probably news, probably there was a liquidation cascade that happened recently, and he's scared that okay, this might not play out. The next thing this trader can do is go to poly markets and bet no. So even if even if his trade goes sideways, there is a stop loss. It manages his risks, and he's going to make money on poly markets to cover up for his losses on the trade. So that's like one of the ways people use to hedge on prediction market, but that is just one way. There are other ways people could actually make use of it. And one way, and another thing which I discovered was that So many categories on poly markets, especially, there are some categories that tilt towards yes the most. That out of every 10 markets on that category, poly market, we have different categories. We have sports, politics, weather forecasts, crypto prices, wars, Middle East, anything which you could think of. Probably anything, but not everything. So there's some categories like sports, like poly markets, like politics, sports, crypto prices, and you would find that in sports market, you will find more of yes. That is, if you use the data to actually research, you'll find that most of the time, the markets there resolve to yes and not no. And I've been in a Discord of like a bunch of prediction markets trader, and one of the guys there was like, every market like on this aspect of things is always yes. So he's going to bet yes. And there are other categories that if you make use of data, you'll get to see okay, if this category does more of yes, that means this market on this category should actually go for yes. But you can use other tables like this one, which I looked into, built by Alex built this, and this table measures the accuracy on poly markets to what happens in real life. And it says that poly markets, 4 hours before markets resolve, there is a 91% accuracy on poly markets. So if they say Donald Trump is speaking in the next 4 hours, and before that, or before he speaks, 4 hours before he speaks, whatever you see on poly markets has a 91% chance of being true or of being what it will resolve to. And they said 12 hours before markets resolve, it's 80%. So now, if you can, look into these and couple it together with the first concept I gave you, which I said that, you know, you could check out some market categories that are more of yes and more of no, and you come up with these, and you're like, okay, if this market does more of yes, if it does more of yes, and 4 hours before market resolve, it shows 91% accuracy. That means you could just keep on, stacking your money instead of trying to be right. You're only using data to make information or to gain your own advantage, right? Data itself doesn't lie. Data is the truth. Data is the way. Data is the life. Data is everything, right? If you need any confirmation, you make use of data. But so many times that you cannot use only one data point to predict. You use couple of data points like this. So now, someone like me, I would come up with this. I will look into this dashboard and go ahead to build something else. I'm like, okay, let me check for politics markets, for politics single markets, because poly markets have single market, they have multi outcome markets. There's some markets that are just either just plain yes and no. There's some market that have different options. So like, let's say, they'll say who will be the next president of Nigeria, and you have Tinubu yes and no. You have Peter Obi yes and no. You have other choices to make, right? And every choice is like a sub market that has yes and no shares to buy, right? So that is like multi outcome market. So like for single markets, I think it's going to be a lot more easier to build something like this for single markets, because multi outcome markets, um the data might be a lot more harder to retrieve, but not impossible. It's still possible, right? So someone like me, I will just go ahead to build that, and I'll look at it and I'm like, okay, if this category does more of yes, it resolves more to yes than no, and 4 hours to the time, this is the prediction that poly market traders are predicting. This is the shares that have a lot more probability on happening. So I'll just buy that with little box and make some gains. And the thing about predicting or gambling or probably whatever you call it is that you don't actually have to be aiming for huge wins at every market. All you could just do is keep on stacking your wins and stacking your wins till get something bigger, right? That's like the principle. People call it the principle of trying to recall the name. But there's a principle that actually applies that way. People do not. There's some people do not just bet for every big win. They just bet to stack. They just bet to stack. Like they don't care so much about so many multiples. They just want little stacks, and in like few months they are able to get wins. And the funny thing about prediction markets is that there are so many traders that you might want to look into their profiles, and you would find that this trader is not a good trader. He doesn't have insider information. But somehow you would see his win rate like 70% win rate, or you would see 80% win rate, and you would think at first glance that this is actually a beautiful trader. But at the end of the day, what this trader does is just he's just trying to be as accurate as possible. He doesn't need so much multiples. He doesn't need 5x or 3x. He just needs little percentages to keep on stacking. And when people start to copy trade him, he can actually know that, right? People build bots, and when they make trades, they can see the number of other trades that follow after them, right? People can actually get to know how many people are copy trading me. And when you copy trade them, some of them now use you as exit liquidity. Funny enough is that they make their bets and they're sure that people will copy trade them, and when you copy trade them they actually sell their shares. So people do not trade to make money, or sorry, to be accurate. They just trade to make little bucks. They don't want to wait till when market resolves. They just make money that way. Another way people make money on prediction markets is most of the time they look for price discrepancies. There are some markets which you would enter and you look at the prices, and you might see a price at 70 cents, and that is $0.7, and you might see another price at 30 cents, $0.3. And this trader is so sure that, okay, let's say yes it's at 70 cents and no is at 30 cents. This trader is so sure that it's actually going to resolve to yes, but he believes that no should not be priced at 30 cents. So all he has to do is just to buy that 30 cents. And when he buys, he waits for two things: either more people buy that 30 shares, or more people sell the 70 cents, and he makes his money and is out. So you don't actually need to be accurate at the end of the day to make money. All you have to do is just to gain an edge. And so this is just one edge which I've exposed. You could get to see okay, if I'm to go deeper into this dashboard, there's a bunch of writing here that Alex made, and I think it's dirty. And this is BS score. So now if you find here poly markets, total markets, yes, percentage of yes. So on all of poly markets markets, 74% times it resolves to yes, 25% times it resolves to no. And he broke this into different buckets at different time frames: 1 day before, 12 hour before, 4 hour before. So there are lots of discussions on why it's resolved to yes, and he said things like acquiescence bias, herd mentality, low liquidity. But there are lots of other reasons that applies. There are deeper research that shows that um, people buy no to capitalize on price inefficiencies, right? There are lots of external vectors that affects poly markets prices. So sometimes what you're seeing is not actually what is going to resolve to. Also due to liquidity, there are some markets that are less liquid, that little cents can push the price at a very large margin. Um, just imagine um, just imagine a token. Let me step out of poly market. Let me say a token is priced at its FDV is about $150 million. and someone goes into the market and buys the token with $100,000, and you would see the price shifts by a large margin. Either it's shorting or is he's long, or he's longing, right? And it goes by a large margin. That is to show that that FDV that you see there is not the true FDV. A market that is priced at that amount of FDV should not make so much move compared to that amount of money he bought with. So that applies same with poly markets. There's some like a lot of markets that the price inefficiencies are just exaggerated because there's low liquidity in the market, right? There might be large volume in the market, but there's low liquidity in that particular market. So this can actually affect the accuracy or this his data. But I discussed with him and he said that he created something else that could excluded liquidity factors. But it is like one way people used to stay ahead of the markets. They check out um, the categories which markets resolve the most to. You check out the accuracy on different time frames, 4 hours, 12 hours, 1 day, and they know which position to buy or how to make money from the market. And another interesting thing which I found was a data that was visualized by a Pantera researcher. Trying to get how can I get the? I think I just have to go through my chat then. So okay, this is it, right? It's okay. So coupled with the accuracy table, the accuracy data dashboard, and alongside with having to know which categories market to resolve the most to. This was what she got, and she made use of Dune data, and I'm sure a couple of other Web2 visualization platforms, which she hasn't mentioned yet. And this was what she was able to find out. So she said that sports markets accumulate volume earlier on. Let me check. Sports markets accumulate volume earlier on and flattens near the end. Well, news markets stay quiet and rise at the very portion right before resolution. So you would get to find that sports market accumulates volume early on. So more people, make predictions on sports markets when the market begins, and you can also check when markets starts on Dune, right? Dune, there's actually a Dune table that has a column that shows that, right? And you would see this, right? It's beautiful, right? So this is news markets. Sports markets starts gets lots of volume early on, and towards the ending, it goes slower. So when it slips down, and towards the ending, um it gets higher, right? So this actually is gold. This alone is enough to give you edge alongside with the accuracy dashboard, right? So if now you know that, okay, sports markets, the volume starts earlier on and towards the ending it goes lower. At that point, you can easily look into data and say, okay, when is the best time to buy? So if poly markets, if this data shows that, okay, it starts now and towards the ending it goes lower, that means even at the beginning of the market, you are sure that or okay, let me say news markets, at the beginning of the market, you are sure that even if you buy a share that is not going to, that is not what the market would resolve to, that you could still make money off that market. Because towards the ending of the market, more volume increases. That means people are changing hands, are selling off their shares, and you're making. So let me say, let me say. you buy at when a share was at no 20 cents and another was at 80 cents, and they get to find that, and the news, news just goes higher that okay, this was actually wrong predictions, volume changes, people start to sell off their yes to no. So that's how you make money. So there are different formats that you can use to, all it really boils down to is what are you curious about, like what are you thinking about, and it's from your thoughts, from your questions, that you can make use of the data. This is like one way. There are other ways which I found. This was one by Jan, and in this article he shared a lot of research and data. He made use of Dune as well. He made use of Dune, but a couple with other data engineering techniques which I'm not quite familiar with. There are levels to this thing, and he exposed so much that market makers who buy, like, this is a line. He says market makers who buy no outperform makers who buy yes most of the time. So there are like a lot of reasons some people just buy some shares, not because it's what the market will resolve to, but because of price inefficiencies, market inefficiencies, they are getting something in return. So at the end of the day, in as much as I will not be able to review everything, since I do not know everything, but when once you are able to understand, okay, how the data works, how the data flows, and you have questions on your mind, you could make use of this. So this is like one way. It's like a very good article. It's about 26 minutes read, and you get to see there are a lot of interesting things happening on poly markets that people no longer bet just because they want to be accurate. They just have other views. And another thing which I think is much more important to state is that um I think something just came and I was about to just mention, but I can't recall. Okay, yeah, that there are market makers at the moment in poly markets. There are in few numbers. We have the likes of Jump Trading and a couple of other few market makers, but they are still in few numbers. And most of them, the reason why they've not engaged into poly markets, the liquidity on poly markets is actually small. And there's a research that was brought out by Animoca brand, and they said that seven, I want to be right about what I'm saying. They said about 77% of the volume that is on prediction markets, or I think, yeah, poly markets or prediction markets, is not done by single entities, that is done by market makers. So at the end of the day, these market makers, some of them, the reason why we've not had influx, someone like Kaushi uses, they have their own internal market makers. Other large hedge funds or market makers outside Web3, in Web2 and the likes, that might want to be interested into this poly market data. The reason why most of them are not yet in, aside liquidity, is that they need to build lot of data points that they'll be able to use to make money. Like what this guy showed here is a very good data point for these market makers. And you would find that okay, these statements about no being bought by makers the most, it varies across different categories. So if a market maker is to enter into cryptocurrency or enter into prediction market, he cannot market make for all the categories, because these categories, they react differently. Danning showed how how sports starts with lots of volume and reduces and flattens towards the end of the market resolve. Well, news acts differently, opposite, different directions. So these market makers, they cannot actually, you know, come in and dominate all categories. So now it's left for we researchers and data analysts to to question, to make use of the data, and to tell that okay, this is what a market maker that wants to market make for whether category needs to know. This is what this trader, or this is what this market maker needs to know for politics. This is what he needs to know for world events categories. And I think from there you would get to probably make money or make use of the data for yourself. And you would find that, okay, because the belief is that if I'm a market maker and I'm market making positions, I do not want to be buying more of no than yes. Instead, let the buys for any shares be equal. Let it be the same. And you would find that it's only finance that has close percentage points, a lower percentage point compared to others. And there's a reason for this. There's a reason why finance is this way. Probably because it's a lot more harder, or probably because before you can make a prediction on finance, you need to have skin in the game to an extent. You need to understand all these annual core reporting and all of that, right? So maybe that's why there is little disparity between the taker returns and the maker returns. So this is like, there are lots of things that you could, the only way to forecast most of these things before others, or to make use of the data to see other things other people are not seeing, is when you are able to ask yourself the right questions. And there are so many aspects here in prediction market that have not yet been touched. Lots of aspects, lots of researches that people are pondering, people are looking to understand on how to make money. And I think I have more things I would like to share. So I think I've shared this one. Um, Another is correlation market, right? At a time, I actually had in mind to build something on that line, but I got discouraged. I'm trying to remember why I got discouraged, but I stopped building it. I was basically vibe coding it. Trying to remember. I just got discouraged from building it. I can't think of any reason. I can't really remember why. But the truth of the matter is, there are so many markets on prediction markets that they have correlation. And what I mean by correlation is that a market in politics category can influence a market in um, probably war category. How do I put it? Okay, um, let me give an instance. Let's say we have a prediction, a market on that football category, and this market is titled um, it's actually a football match, and it's Nigeria versus Cameroon. um, who would win between Nigeria versus Cameroon? Let's say it was AFCON period, right? Nigeria or Cameroon, right? So it's either, okay, no, no. Let's say the market is Nigeria. Will Nigeria win against Cameroon? Yes or no, right? That's like a market. And then you go over to let's say um, probably a natural disaster market, and you find that um, it says earthquake earthquake would happen in Nigeria. So date, and the date happens to be dated on the day these Nigerian players would be on the field, right? These markets are correlated, although they look very different. And how do this actually correlate? It correlates on the level that if if or let's say, okay, let me bring back the dates. Um let's say this earthquake was happen a day or two before the Nigerian match, and the Nigerian match is an away match. They are playing in Cameroon land. So, and let's say it shows the accuracy from the accuracy dashboard. It shows that, okay, this is most likely going to happen. That's going to happen, yes. And you can tell that if more of these Nigerian players, their families, are here in Nigeria, and this earthquake happens, it's most likely going to affect their tendency to play well and to win Cameroon because they're worried that their family might be affected or something, right? So it's psychologically, it can affect their performance to play. So someone basically could just know, okay, this market actually they correlate, right? So why not? Okay, why not? If it shows that this earthquake would happen in Nigeria, why not? Okay, buy buy no on the Nigerian match and then buy yes on the earthquake match, right? So this person can, and let's say it happens like that way, he makes so much money. If it doesn't happen, most likely he's going to lose on both sides, or most likely he will lose one and win one. So it depends. So there are lots of markets on poly markets that they correlate. They are like they follow each other, and from there, sometimes that you might see these markets correlate, and you are able to tell that if this on this side it shows 70/30, on the other market it shows 50, let's say 20/80, and you feel like since this market correlates, that 20 is too low, that 20 is too low for where it is at. So all you just have to do is buy, right? So someone could just build a dashboard. It doesn't have to be on Dune. You can extract the data from Dune and you take it to wherever you want to build. And you build that, okay, or you use an AI agent and say, okay, snipe correlated markets for me. That's all your building is to target. An AI agent that can show you when markets, when there are correlated markets on that platform, and you make money off it. And even at that, you are able to even know, okay, that this is going to happen, this is going to happen. It helps you to plan ahead. It helps you if you have the money, you travel out and you come back later on. This is what poly markets can do for you. You don't actually have to be accurate. Even if that 20%, it will not resolve to that. All you have to do is to buy, knowing that people would buy on later, people would sell their year shares to buy that, or whatever happens, right? So if you can study the dynamics around correlated data, you can make money. You can forecast trends before everyone else. And this alone can help you forecast trends and make money at the same time. You can say, okay, if this accuracy dashboard says that, okay, in fact, you can even break down what Alex has built, and what you're going to say is, okay, fine. If it says that the accuracy on poly market is 91%, but okay, the liquidity he might have not limited, or let's say in set a limit for the liquidity market, or for the amount of liquidity that should be in every market. So you go on to say, okay, I want for poly market category, what is always the accuracy 4 hours before it resolves, 12 hours before it resolves, and I want it to only, because if your liquidity is too little, it will skew your data. If it's too much, it would also skew your data, right? So these are like, should I call them outliers or what? Right. So you do that, and you can still keep a poly market that it might actually be different, right? That 4 hours to before market resolves is not 91%, it's 75%. So you can then come together with lots of other data points, and you forecast your trends. So at the end of the day, it's all about asking the questions, like it's asking the right questions. At the end of the day, it's asking the right questions, that okay, why is this way, or why is this not this way? Why are people market making? I remember at the time I was asking myself, if there is no liquidity on poly market, why are people market making? Why? Then few weeks later, I then read that article and I said, okay, people are just, some people might just be going there to just buy no, and once their orders get matched, they are just good to go. And that's all that matters. So they're like, from asking the right questions, you would get to and since you already understand how these markets work, what happens on chain, how when you buy, what happens, how you receive your tokens, you understand how these tokens get burned, what happens when it resolves, what happens when you sell in loss, how it interacts. You understand the data flow. because for you to make use of any protocol, you need to basically understand how it's structured, how data actually is structured. It will help you to make a lot more sense on how to use the data. So this is like one aspect of things to know. So you could basically build something like this with machine learning, and Analytic Sage teaches that. So you could use machine learning, you could use Python and find correlated data, and you forecast trends. You can know what would happen from this data point. Another thing which I do not think you could basically use data for, I think, is just you know just common sense. Is like bounty market. So this actually went viral. This man bets 50,000 that someone will run into the field on the Super Bowl, and he was fined $1,000, but he cashed out over $300,000 to himself. There are lots of markets like that on poly markets that could be gained. And there are times that some traders have raising points that some markets should not exist. Earlier on, before poly markets, there was another you know prediction market called Ugo. And Ugo was a lot more decentralized in the sense that people could just create open markets. Just like Exo Market, for instance, it's built on BSC chain, and anyone could open a market. All you have to do is, I think, you must have generated about $1,000 on the platform. Then you can see the platform, see a market, and open a market. So anyone could just open a market, and it gives room for bounty market. So what is bounty market? Bounty market is a market that you believe that someone can do or can happen. Or let me say, okay, it says, will a balloon be popped at, let's say, Donald Trump's birthday? Most of the time you are so sure that someone will just pop the balloon, and he has bought yes on poly market, and he just goes to pop the balloon. It has popped, right? And he makes his money. The other one that went pretty viral was that of Trevor Noah, right? That's his name, Trevor Noah, this guy that talks a lot. And on poly markets, there was a market that says, would Trevor Noah say potato? And he actually betted yes, and he came on. Him himself came on to the show and said potato, and called his username on Poly Market, and he made money. So there are lots of other markets that you can just look at it, and you can tell that someone will take the risk to do this. There was another market. I think someone did something that the 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 sport had to stop people from coming in with bags, something like that, right? There's a market that you can just look at and you're so sure. There's a market that someone will be like, okay, let me say I go to Exo Market, and I say, would someone order a pizza for me, right? So it's very much easy to bet yes, because so I can actually tell someone else, hey man, I'm going to pay you to deliver me a pizza, and you act like you're giving it to me. I do not know you, right? So once that happens, I make the money from Poly Market and I pay him. It's actually that crazy. And I think the funniest of it all was at the time when this governance ICO platform MetaDAO we carrying out a lot of sales, right? And you could see a market like will so projects exceed $1 million in its raise. So some whales could, you know, go on and just buy yes on poly markets. And then they go on to the sales and buy, and they buy the sales with $1 million. They don't have to wait for the last moment, and they buy the yes, and they buy and they buy the sales. So even if the sales doesn't do so well, even if it doesn't do so well and they lose money, whatever they do on poly markets covers up for their loss. So there are like lots of these are like the few things which I think everyone needs to have like at the back of their mind. And from there on, you could think of more things that could help you ask the right questions, and then you know how to um, play with the data and make sense of it. So I guess this brings me to the end of my session. I must have yapped a lot. How many hours? Probably an hour plus. But yeah, that brings me to the end of the session. If there are questions, I'll happily answer them.
Amazing, amazing. Thank you so much, sir, for that wonderful session. So I don't know if
Thank
everybody
you.
can hear me. Okay, if you can hear me, just drop something in the comments. Like I need to see rounding applause right in the comment section because Mr. Tim has done justice to today's session. So if you have any questions, right, feel free to ask as well. There was a question earlier which I will be sharing by Boyd Jr. He's asking, what if you lose bets? That is like, what if you lose bets? So
Oh, okay. Um, Sorry. What is the context of the question? In what's I mean, it's impossible not to. I think the reason why data matters is that it helps to reduce the number of bets which you lose. Most of the time, the reason why you lose bets is that sometimes it could be influenced by poly markets. And I want to give an instance. There was this market on poly markets that was titled Time Person of the Year. I guess I think let me share my screen and go over to that. Let me share my screen. There are many reasons why you could bet, but the reason for I think everybody needs to understand how to use data is because it helps you to lower your chances of losing. Data doesn't lie. Most of the time, the reason why you might lose is because maybe you did not know how to read the data very well at the time, or any other reason, right? Or probably you just made your own mistake. Sometimes it could be from poly market. Let me show you one that happened recently. Let me see. Let me see. Hey, taking a whole lot of time. I don't know. Okay, let me say time person of the year. I'm trying to look for a market like that. Well, let me just use this. I think trying to check for resolved. There's one I'm looking for. Sorry, I have to time person of the year be released. No, not this one. Is there another one? Is there another one? I'm trying so much. Should be time person of the year. Let me see. Time person of the year. Um, time person of the year. Looking for result. Okay, yeah, this is the market. Finally found it. It's this one. It's time 2025 person of the year. It's loading up. All right. So let me show you what happened at the time when this market was resolved. Um, you would find that it says it says time person of the year is architect of AI stroke other. Now I was watching this market, although I did not place a bet. I was just watching, and it was quite a popular period last year. People were trying to make bets on this market, and at the time, artificial intelligence, as you can see, it has like 6 million. That's like 6 million volume, although it's not the highest. But most people betted that this would be the this is what the market would resolve to. But that results came out and it was architect of AI, right? So people were like, AI, what the fuck is that? Like it still has AI here, but why are we also seeing AI? Why is this one not, since it has the same distinction, almost like the same meaning, artificial intelligence, and it also has architect of AI. So people were like disputing the facts. And the funny thing was that this order was just order before the market got resolved. The poly markets team just added this stroke order, and that was that was what happened. The funny thing was this act of AI was not here, so people were like disputing that it should be this, that it's still the same thing. It's actually AI. Lots of money was lost in this market. So there's sometimes that your data must have showed you this, but something funny happens, and they said no, it's not that this is actually going to, it's actually under order, that is not the same thing as I am AI. Boom, you lose money. Some other times it could just be because you you made your bet out of probably emotions, or maybe you were copy trading the wrong person. It's it's impossible to make predictions without losing. There is, as I said earlier on the introductory part of the call, that there is this bit tensor subnet. Bit tensor is an ecosystem built on bit tensor itself, right? So it has subnets. Subnets are like different ecosystems built on bit tensor, and they do different things. It's more like it's actually an AI category, right? And what this subnet does is that it trains miners. These miners, they train to get the probabilistic pathways of crypto prices. And they can say, okay, in the next 1 hour, Bitcoin is most likely going to move in 100 pathways. They now plot it out. So for I think every 1 hour, each miner has like 100 possible pathways on the direction Bitcoin price would be at. And they submit this to a meta model. I'm saying these miners they're like over 10. So they're giving a large chunk of data to AI, to a meta model, a bigger model. And this bigger model runs with this entire probabilistic pathways and come up with one. And it itself, it has like an automated trading structure, and it bets and still loses money, right? So you can see that this AI itself is also using data, right? These miners are using data from somewhere. Meta model too uses data, then the trading engine generates the direction and it bets. And I can show you that account on Polymarket, I guess. If I can remember the name, the name is Since Data Profiles. Yeah, this is it. Um, See, like they make over 11,000 predictions, and they do not have any active positions, but they have closed ones, I guess. This is how much these guys like. They only bet on Bitcoin prices. They actually, make lots of bucks. And you know, in the past, I think they stopped betting at some point. I think they are trying to build something else. But this is how much they've been able to make. And if you're interested into poly market, there are some other tools which I think everybody should check. Poly market analytics. I think so. You can use this to check the win rates of traders. This guy at a time had like about 65, 50 something win rates. This should come up. So it's going to take a lot of time. Uh, it's taking time to load up, but you could make use of these sites and you can just key in the username or whatever or the address, and you would get to see the win rates of traders. You could even use this to look for good traders. And how to do that? Just go here, traders. Then um, you see lots of um, sorry, I'm trying to get this. Sorry, my laptop is not cooperating. But yeah, that's just like it. I think um poly market analytics. So yeah, you could check, you could filter for traders. You could say, okay, this trader, filter for his PNL, filter for his win rates. You can reduce if you want to reduce, or however we should choose. Right. So you can then check on categories. Probably if you want to copy trade a trader, you do that. Um, you know, so basically that's just it. Betting, losing money is inevitable. Okay. Someone also asked a question. Is querying the poly market data on chain enough to give one an edge, or it must be combined with some other kind of factors? Okay, so to answer this, querying querying is the main thing, but before you query poly market data, you must have a question in mind. And now, for you to have the right question, you need to have skin in the game. You have to probably must have taken bets on poly markets. You lose your bets. Sometimes you see that a bot front ran you, and from there you are now going to be able to say, okay, this is what I should query for. But this is the absolute. Once you have the right question and you understand the data points, how the data is structured on Dune, then that is enough to give you an edge. That is absolutely enough. This research report that you must have seen here, that it looks outside of Dune, was still gotten from Dune. Probably he got it from Dune. Um, used like this is the GitHub page. He used some other platforms outside Dune, or some Web2 visualization platforms. As a friend said, that's what this guy must have done, because I've seen things like DocDB. He must have used other platforms to, you know, gotten his edge and this data. The data is just on Dune. All you need to do probably is just increase your skill set on how to play around with the data, and that is just it. Dune is the absolute source. Dune is just the absolute source. Oh damn.
Okay, thank you so much, sir, for that. Okay, I don't know if I'm being heard.
Sorry, can you hear me?
Yes, sir, we can hear you, but your voice has been cracking.
Damn, sorry about that. I think it's network. But how about now?
Yes, sir.
All right. I think I concluded um Nduke Benjamin's question. I guess I don't want to pronounce it wrongly. Yeah, I answered the last question.
Okay. Yes, sir. So I hope he has answered all your questions. Benjamin, did you get your answer clearly? If you did, if you're okay with it, you can just leave a comment in the chat section. Okay. So, guys, thank you once again to Mr. Tim, and thank you to everyone who asked their questions. Feel free to follow our speaker on his socials. Before we go, just a few announcements. Currently, the registration for the Python cohort 2 is ongoing and it closes on February 28th. Currently, there are 13 slots remaining for our 20% discount offer, and there are also 2 pay and 3 pay instrumental plans. So you can either pay, like, cut your instrumental payments into two parts or three and make payments for the program. So I will be sharing the link to register in the chat. And we have the Beyond the Query X space coming soon. That will be announced very soon on our socials, so watch out for that. Then we have the Become a Blockchain Data Analyst waitlist. If you missed joining our cohort 7, which is currently ongoing, you can join the waitlist ahead for the cohort 8. I'll be pasting the link in the chat to that as well. And of course, just briefly, I would like to make a few announcements about our organizations. There is Sages Lab. Sages Lab is the primary organization of Analytic Sages. It is the organization that the other subsidiaries are basically under. It is a blockchain research and development hub building on-chain data-driven solutions. And you can do well to follow us on X. Then we have Fluxo. Fluxo is an autonomous private intelligence agent that understands the market and executes high value strategy without information leakage, particularly in DeFi. So, and of course, there is IntelliSages. IntelliSages is our research arm delivering cutting edge insights on crypto adoption, blockchain trends, and emerging markets in Africa. If you haven't seen our latest report on state crypto adoption in Africa, you can check our social or just get the reports. You can read the report. I will be pasting it as well very soon in the comment section. So once again, I want to just say special thanks to Mr. Tim for honoring our invite and being a speaker during the session. And also thank you very much to our beloved audience for tuning in to today's session. That's a wrap, guys. The replay will be made available within 48 hours for those persons who registered. And of course, we'll be sharing it on our socials. Until next time, guys, keep learning, keep building, and we'll see you guys in the next one. Bye bye.